Thanks a lot, Ryan, for the introduction. My name is Darren Burt. I'm with Avalara. You can tell the people on the call who are with Avalara, we have our bright orange on, well, except for Steve. You missed out on that one. But
Email.
like I said, my name is Darren, and Tom is my manager, and Steve is our partner marketing manager. We are all aligned with this partnership with Retail Control. We're super excited to have this opportunity to meet with everybody and kind of go over, like Ryan was saying, a high-level overview of everyone's favorite subject, tax compliance. I mean, who doesn't get excited about talking about sales tax on a Wednesday? I know it's a nice rainy day where I'm at, so what better day to talk about it? Just to go over a little bit of the dynamics and agenda. Avalara as a company has been around since 2004. We're a software company that automates the tax compliance process for businesses. Retail Control is a great partner of ours that we work with, like I said, myself, Tom, and actually Melissa, who's not on this call, but she's also aligned with Steve and Tom and I for the partnership. So we appreciate this opportunity. There's no better way as a company, Avalara is very partner centric. It's how we go to market. There's no better way to get introduced to us than through a great partner like Retail Control. We're super excited about being able to talk to clients. Sometimes there's a need, sometimes there's not. But like I said, we'll always work with Retail Control to figure out how we can possibly help your compliance process and by automating it. So with that, we'll jump right in to our agenda. Go over why tax compliance matters to all businesses from small to medium size to enterprise level. What do I need to know about sales tax? Where, depending on my situation, the businesses, where they're located, different things like that. What do I need to know to make sure I stay compliant? We'll do a small section on what if my customers are not taxable, if you have any exempt customers, and the process and laws and legislation that you have to follow to make sure you're doing everything properly there. Then we're gonna get into how I can streamline sales tax. That's what I like to say at Avalara, where anything that you're having to deal with from a transactional tax compliance standpoint, whether it's sales and use tax, exemption certificates, filing and remitting returns, we all know to some degree or not how complicated the US sales tax laws and legislation are, and they're not getting any easier. They seem to get more and more complex, and things are always changing. And as a result, it puts a strain on businesses to have to keep up with that and make sure they're doing everything correctly. So that's the streamlining process that we'll get into. And then Karen, after Tom and I are done, is going to go over the actual integration that they've built out to the Avalara system, and kind of go over again at a high level how that works. Happy to answer any questions as we move along. We're happy to pause and answer if you want to throw a question in chat. Ryan's going to monitor that for us, and happy to stop us and go over it. We'll do our best to answer it. If it's a super complex question, we're happy to take it offline afterwards and try to have a more intricate conversation with you guys. And then we're going to save a few minutes for questions and answers at the end as well, if there wasn't any throughout the chat and presentation. So why does tax compliance matter to all businesses? Bottom line, it's every person, every business, every day. Like I mentioned earlier, it's not getting any easier. If you're a business, you're selling to, whether it's B2C, B2B, static transactions from a POS location in a store, send sales if you're selling online, or also send sales, even if you don't have a website, if you're having send sales where you're sending them out, there's still, if you're shipping to another state especially, regulations and laws and legislation that you need to make sure you're staying compliant with. And then with e-commerce companies, trying to find different revenue streams. Some are traditionally just been B2C. They start to sell B2B. There's, go into global markets, mobile applications. All these things are going to affect the business's compliance and how they manage that. When we talk about sales tax, you see some statistics here. There's 27 states that receive the majority of their annual revenue from sales and excise tax. And you can see the percentages over off to the right. That's a conservative number, the 24%. and we're going to get into the South Dakota versus Wayfair decision. My colleague Tom's going to go over that in a little bit. But ever since that ruling came down, a lot of states realized that they were missing out on money from sales that were shipping into another state. So they're after that money. And you can see from this slide right here why they're after it, because it's such a huge component of their actual revenue. So what as a business owner do I need to know about sales tax? Bottom line is it just comes down to the where, the who, and the what. There's so much with product taxability. Different states have different legislation. Some tax services, some don't tax, some tax software, some don't. And in the 3 years that I've actually been with Avalara and talking about sales tax every day, like I said, it gets more and more complex every year. States are following the lead of other states, trying to make sure they're getting, like that previous slide showed, what all they're owed. And a lot of it comes down to, the first component here, the where. Your situation from a compliance standpoint, sometimes you may not need Avalara. You may have a couple stores that are just, like I said, it's the same tax rate. You have someone who manages the returns. It starts to get more and more complex when you start shipping into other states, different rates, and all that. And then the product taxability, depending on what you're selling, that can vary too. And we'll have some slides coming up here that'll show you same product in a different state. That 13, 14 different states have a different rate for it. Some of the challenges that businesses face, is different statutory requirements. One of the biggest things that we find that businesses struggle with is just the actual process of figuring out, whether it's the tax codes or tax rates, or the jurisdiction, whether it is or isn't taxable. Do I need to collect a certificate? Just maintaining that and staying up with the different changes that come out throughout the year that different states release, that time spent from an accounting department standpoint can be the most troublesome for businesses. We also like to say it's 100% non-revenue generating activity. You're spending hours and hours. Your accounting department is stressed over trying to make sure they're staying compliant. They're spending a lot of time and resources on that. And again, from a non-revenue generating standpoint, if you can use a company like Avalara and work with retail control and the Counterpoint connector and streamline that process and make it easier, it's going to be better for the business. Then of course, COVID's just one example. There's, we see changes, all the time that affect compliance and how businesses have to handle it. This just gives you a little bit of an idea. That's not a joke. There's 16,000 plus US sales and use tax jurisdictions throughout the country. Tom, correct me if I'm wrong. I think Texas has like a couple thousand different jurisdictions, if I'm right.
Yes.
Yeah. And we would say zip codes are for the Postal Service. Boundaries overlap. This is an example in Colorado where, we actually, when I started with Avalara, there's training that shows streets that have a 9.5% sales tax rate on one side of the street and 16% on the other side. So services I mentioned earlier, you can see an example here on the slide of 5 different states that broadly tax services, and then there's 5 that narrowly tax services. And again, it's always changing. Software is a big example too, where a lot of states, like I said earlier, they'll follow the lead of other states and change the legislation on what's actually taxable. And just before I let Tom jump in, here's just one more thing about taxability. It's some of these examples here you'll see, and again, it just shows you the complexity of it. Bagels, you buy them in New York, they're taxable as a sliced bagel. If they're not sliced, as they're bought whole, they're not taxable. I mean, there's different things like that throughout the country. Here's an example of just 6 different states and 6 different services that have that variance. And again, just the strain it puts on the business to try to track that and make sure they're doing things properly is what can be costly from a compliance standpoint. Tom, you want to go over Nexus?
Absolutely. Um, yeah, it gets really fun. I don't know. You've got control of the screen right there, Darren.
Yes.
Awesome. So when we talk about Nexus, it's a term we commonly refer to in sales tax, and really to simplify it, Nexus just means a connection a business has to a taxing jurisdiction or like a state or an entity like a business. Um, and so when I use the term Nexus, just kind of think about it that way as like when you have created Nexus, that's where you have to start collecting and collecting sales tax and remitting that back to that jurisdiction. So, but I see on the next slide, there's a number of different types of nexus. Traditionally, when sales tax was set up, it was all on a physical basis, where your company was located, where you had warehouses or employees, like a physical presence. That's what created that connection. But over time, it has evolved quite a bit. Economic nexus, we'll talk about that a little bit more in depth because that's kind of a tricky one, where you don't actually have to have a physical presence. It's just all based on economic activity. Click-through nexus, whether, if you have activities in, say, referral agents or can create a click-through nexus. Affiliate nexus, really if you just have enough people doing enough affiliate business of your company or selling similar products or promoting your products in a state and then marketplace nexus, which is marketplaces are absolutely exploding now with the rise of Amazon. But that can create some interesting nexus complications for businesses as well due to marketplace facilitator laws. Sometimes you have to collect, sometimes you don't. Sometimes the marketplace does it on your behalf. There's different states that have different rules. So there's lots of different types of nexus, and this is just a growing list. We worked with a company earlier where they sold door locks, and they had sent their reps out across the country to install these door locks. And it turns out every state that they went to install a door lock then tripped Nexus because they were sending their repair and service reps there to that state to do business. So there's a lot of like little tricky rules there. The biggest one that we also see is fulfillment by Amazon. If you have your inventory at an Amazon site to ship from up the road, I live in Michigan, up the road is about a huge Amazon facility where they do that. Just having your inventory in a different state can trip that physical nexus and create that obligation. So the rules are really extreme, and there's a big list of them. I don't think this, encompasses all of them. But the latest change is economic nexus, and I work a lot in the e-commerce space where economic nexus is a really big issue for companies because it's no longer a physical presence. Like I said, it's all about economic activity. And 45 states have economic nexus laws on the books, which kind of kicked off by a Supreme Court case called South Dakota versus Wayfair back in 2019. So basically what this was, the Supreme Court ruled in South Dakota's favor against Wayfair, saying, hey, a company selling into your state that does enough business economic activity in your state, whether it's dollar amount or sometimes it's even transactions, that can trigger a nexus, and you should be able to make that company collect sales tax and remit it to your state for that economic activity. It's pretty well known now, as the last few years. However, a lot of companies don't think about this, or it's very difficult to track. And you'll see on the next slide, Darren, there's a number of different states, and they all have different thresholds. The kind of the base minimum is that $100,000 amount, or sometimes it's transactions. Sometimes that's a dollar amount and a number of transactions into a state. Probably my favorite was when Kansas first put this law on the books. They've changed it since, but when they first put it in the books, it was transaction one and dollar one. It tripped that nexus, which was crazy. And South Dakota was the first state to do it. All the states followed suit, other than, I guess there's four out there because that don't charge sales tax at all in their state. Alaska was one of them, but Alaska started doing that in certain jurisdictions and things. So it's very difficult to track all that and keep tabs on when you're tripping a threshold and when you're not, when you create an obligation, when you're not. So that's pretty interesting. There at the bottom, we do have a sales tax risk assessment that can help you determine your nexus, kind of get a bunch of information from you and really help you identify where you may have some obligations and where you don't.
Cool, thanks, Tom. Then we get to you know, what factors into what if my customers are not taxable? If you have some customers that are B2B, they're reselling, you know, what are my obligations there from a sales tax standpoint or a compliance standpoint? Because there at that point, you're not talking about sales tax, you're not talking about use tax, you're talking about an exempt customer, what I have to do to make sure if the auditors walk in tomorrow that my business is staying compliant with everything. And here you can see the map again. What this is going to show you here is exempt sales by state. So all the orange states, they factor in. So if you're selling to a business and you sell $100,000 worth of merchandise, and they're an exempt customer and they're not obligated to pay sales tax on that, that still counts to the threshold for that state. So what that means for the business is they have to register in there. They have to get registered for collection of sales tax in that state, even though it could be a zero return. They're not collecting on this. Maybe you only have one customer in the state of Colorado, but it's still going to put a strain on the business. You need to get registered there, collect an exemption certificate, make sure that that's kept on file in case of an audit, so you can prove why you didn't charge sales tax for them. And you see a couple of states here that are in purple that just have different mixed laws. A lot of it that depends on, you know, what the product is. If there's a service attached to it, like Tom was saying, perfect example, you know, of a company installing something like doorknobs, I think is the example you used. I mean, it can vary by state, or that could trip your nexus in 5 different states just like that. And what that means for the business then, like I said, you have to get registered, get licensed, and then from a compliance standpoint, a lot of times, and I think I have it on this next slide, you'll see, you know, even if all sales are exempt, you can still develop that nexus, that obligation to register with the state tax authority. And we get asked a lot by companies that will send us requests and you know, do I really need to register in a state and file a zero return? Well, the answer is yes. I think you can see on that, I have a slide coming up here that it's hard to believe sometimes, and then it's not just, you know, once you trigger that economic nexus in the state and get registered, it's not just figuring out the tax rate and applying it to invoices, right? What you have to do is, once you get registered, you've got to apply it to the invoice, and a lot of it comes down to the customer experience too. You know, when you have the answers up front and have a streamlined automated process that's going to help you through this, like Avalara provides with the RCS, it's going to help and create a better customer experience all around. You can see here just different audit risks. I mean, the strain that audits put on a business is massive. I think there will be a slide later that goes over how much time is actually spent doing different compliance activities. And an audit can be huge. It can take a lot of resources away from the business and really put a strain on it. Different audit red flags, you know, invoices that don't show sales tax. One thing I do want to say too, I think that last slide that Tom was going over about the Nexus, the risk assessment, one thing we do offer with Retail Control, since we have such a great partnership with them, if you decide it's worth finding out some more information about Avalara, possibly streamlining this process and see how the integration works, see if it makes sense for the business, we always do a first call as like a consultative approach. You know, we'll go through, Melissa's actually with Avalara, she's not on this call right now, but her and I will work with you to kind of dive into what your obligations look like, whether you need a full Nexus risk assessment, or maybe you just need a call with us to determine how many states you're going to be obligated in. And then we can show you some different solutions with the integration of Counterpoint and RCS, and show you how that can integrate into the system and make it easier for the business. Some different seller challenges, you know, say if you have the burden of proof is on you. Customers need to provide documentation if it's an exempt customer, but the business is responsible for sending out that request, collecting the certificate, make sure it's valid, make sure it's updated if they ever expire. And again, even if it's a $0 sales tax liability on those documents, it's still part of that compliance piece that the business needs to be staying up to date with.
Yeah, this is one of those things that Wayfair, South Dakota versus Wayfair decision also changed the game when it came to exempt sales as well. And it really put more of a focus on business owners having the right documentation and being able to prove why they didn't charge sales tax. And from what we hear, Darren talked about those audit risks. This particular subject is low-hanging fruit for tax auditors to kind of the gotchas, I guess. So if you are selling to tax exempt customers, definitely something you want to keep an eye on, look at.
Yeah, I think it's the last survey that we did, I think it was like 40% was of failed audits were because of exempt certificates, that they just weren't managed properly, they didn't have them on file, and they weren't just out of date. And this is just a little bit about, like we said earlier, about the customer experience. You know, customers feel like it's a burden to provide the documentation. With Avalara's solution for our exemption certificate management, once that invoice is processed and the API call happens to Avalara, it's mapped and coded when everything's integrated into the system. So we'll know which customers are not exempt, which are having to pay sales tax, and from the time the invoice is processed, all happens in the cloud base that we offer, and it's all in the sub-second, and it will tag them as an exempt customer. If there's not a valid certificate on file, we'll send a request to that company requesting that. This is just a slide that, you know, like I said earlier about, do people really ask us, do we really need to file 0 returns, like get registered and file 0 returns? The answer is yes on that one. A little bit about use tax. We have a solution that handles that as well. Anyone that's having to manage use tax knows the complexities of it. You know, it's one of those, every state that has sales tax has a consumer use tax, and it's by a buyer when the tax charged by the seller does not address the full liability for that transaction. Different things that businesses can run into. Example would be, you know, like Avalara, for example, when we have hired remote employees, we purchase all the laptops, say in a certain state, but they're being used throughout the country in other states. That's going to trigger a difference. That difference is use tax. The main thing that makes use tax so difficult for businesses is that they have to self-assess it. So it's a very time-consuming process to manage use tax, and Avalara has a solution to handle that for businesses. And it's self-assessed, very labor-intensive. This is just to wrap up the exempt portion. This is one of our vice president of U.S. tax policy at Avalara. Kind of sums it up. You know, generally the burden to prove a purchase or sale is exempt falls on the person seeking that exemption, the company claiming they're not obligated to pay sales tax, while the burden to prove something is taxable falls on the state.
All right, enough doom and gloom, right? Oh wow, tax is hard. There's a lot to it.
So you can go over the good news now, Tom.
That's right. That's right. I'll let you set up with all the bad news stuff there. And so what do you do? Like, what are your options? And at Avalara, we have set up kind of our 5 steps to compliance to kind of streamline to make sure that you not just become compliant, but stay compliant. So we're going to kind of step through these. We kind of arrange it with the 5 steps, and also, you know, Avalara as a product to help solve that for you. But the first step, kind of what we talked about, is you know, where do you have Nexus? You know, how do you stay up to date with the impact of your obligations? Where do you review your business activities? I think there's a second slide to this as well. I was wrong. So what is it's making sure that you understand where you are, do have an obligation, and register. And that's the first step. Where are you selling? How are you selling? Step two is where you do have an obligation. Where do you need to register? So you do have to register with each state where you have Nexus. And it's not a, I won't say labor intensive process to register, but I won't say it's necessarily fun. But it is extremely important. And it is your obligation as a business to register in each state before you start collecting and remitting sales tax. But keep going up to, can you go back a slide? Because it's important to call out that sometimes before you register, maybe if you do have an obligation, and we worked with companies. I worked with a company. I was on a call where they were registered in two states, but doing about $7 million outside of their states, where there's a good chance they trip some economic nexus laws. And so the process there was before they actually registered in those states where they have that obligations, maybe doing some voluntary disclosure agreements to figure out what their tax liabilities were and maybe become current with that state before they register. That's what we recommend. We have a team that does this all the time, sometimes by raising your hand to a state and saying, hey, we messed up. We should have been collecting sales tax. We haven't been. We know that we're out of compliance. Sometimes with our team, we can actually go to that state and by raising our hand and saying, being a good person, we can actually get those obligations reduced, to become compliant and then register. Sometimes if you know you have an obligation and then you trip a registry, that sometimes can tee up an audit or the audit system. You go, oh, we should look at this company. It looks like they're doing a lot of business here, but they just registered this year, but they've been doing business for 3 years here. So something to kind of keep in mind, but we can definitely help with that. Step three is, like Darren said, managing exempt sales. If you're selling to religious organizations, hospitals, government entities, there's a lot of customers out there that you may be selling to that are tax exempt, and we want to make sure that you're managing those tax exempt certificates and staying compliant and proving why you're not charging sales tax. And then step four is calculating the right amount. Darren did a great job stepping through some of the challenges of even just calculating where the product is going or what jurisdiction you're in, making sure it's the right sales tax. If it's a physical location, like I live in Michigan, it's 6% across the board. It's relatively easy. But at the same time, products are taxed differently. My favorite examples are in New York State. If you have a garment that's under $125, it's tax exempt. But once it's over $125, they see it as a luxury item. So then you have to charge sales tax for it. Massachusetts has the same rule, but it's a $175 threshold. In Texas, if you buy cowboy boots, it's tax exempt. But if you buy the matching belt buckle, then you have to pay taxes on that. So there's lots of different rules across the country. And it could be even just the product itself could be considered something different. We have seen where like a cotton ball is considered a beauty aid in one state and a medical device in another, and they're taxed differently. So getting that right calculation is extremely important as well. And then of course, step five is once you've collected the right sales tax, it's making sure you're remitting that and paying the state back that sales tax in the right amount. And that's some challenges too, just because there's paperwork that has to be filed, it has to be accurate. Every state is different. That's what's a great thing about letting states come up with their own rules and laws, is that every state has come up with a different way. Some can do it electronically, some on paper, different filing schedules. Sometimes it's monthly, quarterly, could be annually. Darren talked about Texas and the number of different taxing jurisdictions just in the state of Texas. When it comes to filing your tax return in Texas, they actually make you break out how much tax you have charged in each jurisdiction. So I think there's like 1,200 different jurisdictions in Texas. So I think every single line item you have to go through and make sure you have every jurisdiction and how much tax you collected in that jurisdiction, which can be really, really difficult. And then of course, already switchable, but it's, yeah, the remittance is extremely difficult. And it's probably one of the most important parts, because this is the part that the state cares about the most. All right. Sorry, go ahead, Darren.
Yeah, I like this slide a lot too. Just it sometimes brings me to one point I wanted to make. As far as streamlining the process for businesses, Avalara can offer you, again, through our connection and our partnership with Retail Control, we can offer an end-to-end tax compliance solution. Anything that you're having to manually manage from an indirect tax standpoint, we can automate. Now, that being said, a lot of businesses don't need everything. So what we'll do is we take that very consultative approach with you on that first meeting to kind of dive into what your needs are, where you have the most tax pain, as we call it, whether it could be filing returns, maybe you're trying to figure out what's taxable, what's not, different rates, depending on where you're doing business, what you're selling, all that's going to affect, kind of what your needs are. So we're not going to jump in and sell you an end-to-end tax compliance solution. Maybe you only need help with returns. We can do that. Maybe you just need help with calculations. Maybe it's exemption certificates. So this slide just kind of breaks down. You can see the different hours that are spent, whether it's a small or a mid-sized business. Researching Nexus is a big thing that Tom and I both talked about. A lot of times the main pain point is just determining what they need to do or what the business needs to do. Maybe you're in a state or a couple states where the returns are only semi-annually. You don't have too much time spent managing that, so it varies widely depending on the business and depending on what your actual needs are. So why automate sales tax management? Avalara is the most accurate. We've been around the longest. We've been around since 2004. Everything's cloud-based. We've got teams upon teams that manage and look for different tax law changes. And so we're definitely the most accurate. It improves the efficiency of the business that we talked about. We work with the accounting team to kind of streamline the process so that they can spend time elsewhere and not spend so much time on those non-revenue generating tasks. And just a better customer experience. And then as the business is growing, as the business is scaling, it's the other thing about Avalara that we'll do is we'll scale with you. So depending on what your needs are, and once we determine that, we can start you out on a lower plan. And as the business grows and scales, we can grow with you and continue to evaluate what those needs are so that we can help. Just almost a couple more slides here, but this is just the top benefits of implementing and automating a solution like Avalara. And these all come from surveys that we talk to CFOs and controllers, just different things. Peace of mind is a big thing with audits. And if you do get audited, the one thing with audits too is if they come in and they ding you on something, you can bet they're going to be coming back next year. So it's kind of a process, unfortunately, that happens that way because they know they can find things and then they can get money and get revenue from that. It's going to happen. We've talked to businesses all the time where that happens. Okay. We are at the end of our portion of it. And again, thank you for Karen, Ryan, and Ben joining us. Karen, I think you're going to, before we get into Q&A, you're going to go over some of the finer points of the integration and the partnership and how we can help. I'm going to leave this slide up real quick, Karen, so people can write this down if they need to. Myself and Melissa are going to be the two main points of contact that work with the RCS team and this partnership. So feel free to reach out, email or cell phone to either one of us. So, go ahead, Karen.
All right, thanks. So I'm going to talk about the integration between Counterpoint and Avalara. And so we use the Avalara product, I think that's called Avatax, to do our integration. So we use an API interface between Avalara and Counterpoint. So the API is how the information travels between Counterpoint and Avalara. And there are two pieces to it. We have the sales tax calculation piece and also a shipping address verification. So as we're entering a customer shipping address in Counterpoint, it's automatically checking with Avalara to confirm that we have the right, street address, and it's got the right zip code, and we've all entered our address into a website for shipping, and we see corrections come back and that kind of thing. So it's validating that we have the right shipping address so that the right sales tax is calculated. And then when that shipping address correction comes back, it will come into Counterpoint and it will update the shipping address in the Counterpoint sales transaction. And then of course there's a sales tax calculation. And as we heard earlier, it's a real-time tax calculation. So as soon as we start the transaction in Counterpoint, it starts sending information via the API to Avalara for the tax calculation. So it's sending information about the customer, where the store is located, whether or not we're shipping the item, what the item is, all these different things that are being communicated to Avalara throughout the transaction. So why use the interface? First of all, it enhances the customer experience, as we talked about earlier, and the sales staff experience and your management experience, because we're all confident that the right tax calculation is happening for the customer, the item, the location, and all the things that we've talked about. And it's instantaneous. So this is happening right now. We don't have to wait for the salesperson to try to figure out the right sales tax to charge and all of those different things that can take up time for the salesperson and for the customer. It's accurate because Avalara is taking care of all of the sales tax updates, and we don't have to take care of updating all of that in our Counterpoint system. Avalara then takes care of our sales tax reporting and also exemption reporting. And I'll talk a little bit more about that in a minute. And then if you want Avalara sales tax filing, they have an extra service where they will take care of your filing for you and all of your your exemption certificate management as well. So who will benefit from this? As they said, they have a service that they will talk to you and determine whether or not you will really benefit from this service. But generally, it's businesses that ship orders throughout the United States and Canada, businesses that have location in several states and localities that want to be sure you're charging the correct tax to every location in every situation. Businesses that have items with various tax rules. So we talked about some of those earlier in the presentation, but like some states tax food, other states don't tax food, different items have different rates. So there's a lot of complexity to that, and we don't need to worry about that anymore. And then also, if you want to sort of move the burden of keeping up with your tax changes and calculations and all of that, and you want to move that burden to Avalara instead of keeping it in the business, you're a good candidate for this. Also, if you use an e-commerce solution, and even if you're bringing sales into Counterpoint for tracking, still the sales tax calculation for these e-commerce sales are usually done from the e-commerce site, and you get your reporting for sales tax from the e-commerce site rather than getting that reporting from Counterpoint, because generally they're keeping up with that side of it, and we're keeping up with the sales that are coming out of Counterpoint. So if you're going to think about using the Avalara interface, there are a few assumptions that we make about usage. First of all, you need a reliable internet connection, because this is happening real time, instantaneously. Like I said, the tax is being calculated all throughout the transaction and updated throughout the transaction. All your sales are within US and Canada, because international sales are not supported. We sort of are saying, if we're going to use this integration, that all sales tax calculations will be calculated through the Avalara integration. We're kind of turning over that calculation all to Avalara. And then also, because of that, Avalara is a system of record for all your sales tax and your tax reporting, because your tax reporting will come from Avalara more than likely. All items in Counterpoint will have the correct Avalara tax code entered into the tax category field of the item. And that's up to the customer to take care of that, you as the customer to take care of doing all of that on your items, and we can certainly help consult with you on that. And now also the tax exempt customers are marked in Counterpoint with a tax code of exempt, and also that their tax ID number is in their customer record, because the tax ID number is what we send to Avalara. And then also just a note that the Avalara integration is not supported with order management or with offline ticket entry. So when we implement this, we install the Avalara integration and do some settings configuration on your Counterpoint server. And then part of the installation of this and the integration makes changes to some of the security codes in Counterpoint and the store settings, so that we're sure that we're sort of taking away the ability to do some things about sales tax in Counterpoint and letting the integration do that for us. Also, it makes a couple of touchscreen and data dictionary changes that need to be made as well for this to function. Like I said, some security codes are changed. A tax authority and a tax code are set up for Avalara transactions, and then a couple of other store settings are changed as well. And then the customer will take care of configuring the tax category and the tax exempt information on customers. So within the Counterpoint item record, you can see circled there in red that the tax category on the item, we fill that in with the tax code from Avalara. And so Avalara has a list of literally thousands of tax codes. And so you look at your item and you say, okay, this item should be this tax code in Avalara. And so we put that in every item, and then that tax code is sent with the item information to Avalara. And that's how they can look at that item and say, well, in Texas, it's one tax, in North Carolina, it's one tax, in Florida, it's another tax. And so this is a really important piece of getting the tax calculations right. And then for our customers, our tax exempt customers, like I said, we put our tax exempt number in the customer record. And then as we are doing transactions, that tax exempt number is sent to Avalara. If you're using a tax exempt management piece of Avalara, it takes and matches that up to the exemption certificates you have on file to determine the exempt status of the customer and make sure that their records are up to date. If you're not using that piece of Avalara, it sends the tax exempt number to Avalara and exempts the sale, but the assumption then is made that you, as the merchant, have all of the right tax certificates on file for your customer, and that becomes your burden of proof at that point. So throughout the sales transaction, as I said, when you're entering a customer and you're entering an item into Counterpoint, every time we make a change within the sales transaction, it's calling out to Avalara. And so if you add an item, it's calling out and bringing back the tax for that item. If you change the customer, it's going to check and see if that customer is changed to being exempt. If you're entering ship to information, it's looking at that address of where you're shipping, and it's updating the information based on that ship to address. So there's many, many calls to Avalara during the transaction. And then when we finalize our transaction by going to payment, one final call is made out. All of the pieces are looked at again to make sure that we're charging the right rate, and that is the rate that's charged on the transaction. At that point, we're updating the transaction with the Avalara sales tax. Also, we changed the tax code to a tax code called AVAL. So that shows that that's where the tax came from. And then, you know, we have tracking then in Counterpoint in our tax codes showing the Avalara sales tax versus any potential other taxes that we could be booking. I've got ahead of myself here a minute, but anyway, it's doing all of this as we're going through the transaction. We support sales transactions, return transactions, validated return transactions, orders, and layaways. If we're doing an order or a layaway, the calls are still made to Avalara to calculate the sales tax. And it's bringing that back into the order or layaway for reference and for calculation of the total of those transactions. But that tax isn't booked in Counterpoint, or it isn't committed, which is sort of booked in Avalara, until we actually release that order or layaway into the final sale. And at that point, that's when it's booked in Counterpoint, and that's also when it's booked in Avalara as being final. And then also we have, as part of the integration, detailed logging of every transaction and tax calculation. So if you ever were to want to look in the background and see how a particular tax was calculated, and sometimes this happens in the beginning because you're not used to maybe knowing all of the details about how sales tax is charged, you can look at all the details and it will show you the address that it's using. It will show you the item. It will show you the state tax, the county tax, the locality tax, and all of the breakdowns, so you can see exactly how that tax is calculated. And we have all of that logging that stays in Counterpoint, and then you can also go in Avalara and see logging for that as well. So lots of detail and lots of research information if you're interested in that. And in a nutshell, that's how it works. So if you're interested in getting more information on that, you can contact your account manager and they will get with whoever needs to give you the information.
Thank you, everyone. That was crazy. I knew that sales tax was a little crazy, but I didn't know how crazy. So I appreciate that. It's pretty intense, it sounds like. We do have a few questions that came through. Jojo is wondering, if we are updating the item records in the live database using Avalara tax codes, what happens when you don't have internet and have to use offline? How does the item tax code marry up to the authorities so we still collect tax offline?
Well, in the event that you go offline, you still have to have sales tax set up in Counterpoint. So, like for example, for offline ticket entry, we state we don't support it in offline ticket entry. But in the event that you lose internet connectivity in online activities, then it just rolls back and it uses the Counterpoint sales tax at that point.
Okay, that answered the question. Let me know if it didn't. And then also, how does the system handle validated returns, either in the same state, city, or across state?
So validated return, it's looking at the ship. I might have to confirm this, but anyway, it's either looking at the ship to that was in the original validated return, or you are at re-entering the ship to. I think it's pulling the ship to in. So it again is looking at the ship to information for the tax calculation rather than using the store physical location to figure the tax. So, in theory, let's say you had a tax change between the time you did the original sale and the validated return. In theory, you could have different tax rates if there was some change made. But again, it's looking at whatever that ship to is.
Wow, complex for sure.
Yeah.
Does having the Avalara integration slow down the transaction at all, or is it instantaneous?
No, it's instantaneous.
Yeah, sub-second.
And what if they're already using Avalara with their e-commerce orders?
Yeah, so e-commerce orders, the reporting for all of the e-commerce, let's say you're using Shopify or whatever. So you're going to go to Shopify and you're going to get all your sales tax reporting for e-commerce orders from Shopify. And so in Shopify, they should also have all of the Avalara backup and everything that goes with those transactions. Then when they come into Counterpoint, we're not recalculating tax or anything in Counterpoint. It's just bringing in the tax that was charged in e-commerce.
Okay. Here's an interesting scenario. If an order is entered in offline mode but processed in online mode, will it use Avalara to calculate the taxes?
No. No, because offline sales, everything's already been calculated.
Yeah.
And so those are completed transactions that are coming into Counterpoint. So there wouldn't be another tax calculation.
All right, and there was one question about how tax is calculated on orders, but I think Karen kind of covered that with the log. You can see exactly how it's all calculated. And
Right, and on orders, it goes out to Avalara just like it was going to be a sale. So it's still looking at all of those pieces to determine the right sales tax, to tell the customer how much they're going to be charged for the tax for that order. So you can give them the final total. But then the tax isn't booked until you release that order into a sale. And so at that point, it commits in Avalara and it becomes a sale in Counterpoint. So if you have an order and it might have 4 releases against it, each time it's released, it's only releasing the portion of the sales tax that goes with the piece that's being turned into a sale.